What's up, guys? How's it going? Welcome to Average Traders. So, Elon is saying he has a super bad feeling about the economy. Jamie Dimon saying, brace for a hurricane. And the Goldman CEO saying there are a confluence of shocks he hasn't seen in his career. Rajan, what is going on?
That is the $64 million question. What is going on right now? I mean, in terms of the market activity, we've still seen major volatility across the board. We've seen massive up days, massive down days. It really does seem like we are finding some type of value area right now where the buyers and the sellers, they're just canceling themselves out in the past couple of weeks. But in terms of the actual underlying economy and what is going on, well, it's really, we've seen, like you just said, we've been seeing all these CEOs coming out and they're really spelling the danger which is happening right now, all being led by certain patterns that they're seeing. And we're seeing inflation really, really biting. I mean, another strong reading. We've seen oil above $120 a barrel. I mean, we're going to see $5 across the board over here on the East Coast and on the West Coast. God knows what it is over there, you know, probably coming up to $7. And this is really, and in the optics, I mean, when you look at fuel prices, that's the real optics you see in terms of inflation in real time, just seeing that tick up week after week after week and getting no respite in those prices. And just want to go through some of these, some of the news that have been coming out lately, and it's all of these corporate names coming up. And I've not seen this for a long time, where a lot of these guys are all scaling back on their hiring. We've seen Elon Musk come out saying 10% of the workforce is looking to shed. And I mean, to be honest, if you look at all of these companies, it's a good excuse to go trim the fat, because I think some of them are running on quite a bit of fat if you think about it. So this is their opportunity. They can use the inflation, the overall economic headwinds, the rising rates as a reason to try to trim their workforce. But it's coming out in full force right now. So I found a good article which summarizes it well in terms of some of the actions being taken from some of these companies. So the big headline on Friday was the Elon Musk Tesla headline, and Tesla was down over 9% on Friday, which was, I mean, you know, a big movement. Pretty much that. I remember I was actually working overnight on that night, and the futures were not down that much. And as soon as that headline came out, we saw the Nasdaq went from green to red, and it just trickled down pretty much out throughout the whole day. So, in summary, for Tesla, they got hold of an Elon email to staff saying that the company plans to cut 10% of the workforce. And that did coincide after that he did sort of demand that people should come back to the office, and that, you know, they should be working a minimum of 40 hours in the office, which makes sense. I mean, you know, the type of products that they're creating, you can't do that over Zoom. So, and he goes, if you don't come up to the office, into the office, then I take that as your resignation. And coincided with that, the next day is the 10% of the workforce. So, I mean, it sort of goes hand in hand, the two announcements that he sort of made. So I think he's sort of preempting, you know, certain people maybe be leaving, don't like going back into the office, or this and that, the whole status quo. So we've had Elon Musk coming out, and that was the trigger on Friday. But I mean, that was just one in a number of companies that have been saying a similar sort of thing. So Coinbase, in their earnings, they are now also extending their hiring freeze, and they're taking it a step further. They've actually rescinded some of the offers they have made to certain potential employees and taking it back. And you know, I've been hearing some of the real world stories. Some of these, one guy had 2 offers for a PhD and other firms, but turned it down to take this Coinbase job as a back-end engineer, and Coinbase rescinded his offer, and he can't get and all the other offers are now off the table, and he's now in a bind, and he's a bit screwed. But you know, this is like real life things. Is really, you know, I mean, one thing is freezing hiring, but rescinding offers, I mean, that's taking it to the next level. And we saw Coinbase's earnings hemorrhaging cash in this prior quarter. So it's understandable what they need to do. But yeah, that's prior to Tesla announcement, we had Coinbase. And then prior to that, we had NVDA as well. And NVDA also announced that they would be slowing the employing rate over the next quarters, and saying it will take a $500 million hit due to you know, the COVID situation in China and the lockdowns. We also had Microsoft coming out, one of the big blue chip companies, also noting that it was going to be freezing on hiring. They cut their outlook on FX headwinds. So I mean, we've got Microsoft, we've got Tesla, we've got Coinbase, we've got NVIDIA. We also had Netflix after their quarter in the previous one, that they would be cutting 150 positions of its streaming workforce, as well as freezing hiring as well. And that was another one. And then the list goes on. We had Lyft, we had Snapchat following their quarter, where Snapchat got smashed another 30-40%. In the last pod, we talked about Snapchat and that massive decline, and they're trading at $14.50 a share. Bearing in mind, they used to be over 80 at some point last year. We had Wayfair as well, Uber, Carvana, Twitter, Meta, the list goes on. Apple as well in terms of their retail staff. Apple actually noted that they were holding off on filling some position for its tech support genius roles at retail stores, and that they were looking to keep the number employed. This is after flat iPhone orders year on year. So, I mean, look, the list goes on. So Tesla was just one in a whole bunch of companies that are all talking around the same type of activity in terms of their hiring. But we did get non-farm payrolls on Friday, and that was a stronger than expected number. So although hiring is there in certain industries, especially in some of these supermarkets, and but in general, you're seeing a trend. And so it'll be interesting to see how all of these company announcements will basically transmit into the later non-farm payroll numbers. How will it really have an effect coming back to when we're looking at the July, August, September, October numbers, and especially if we can't keep this inflation down. So, yeah, this is where we are.
There's around 61 public companies saying they're going to freeze hiring or laying off a certain percentage of their staff. In terms of Tesla, their sales are up 60% globally for the month of May. So with Elon, obviously he's always looking miles into the future, but in this circumstance, he may have seen something in the new order flow that's coming in, maybe potential cancellations that they have. And, if you look at it compared to other automakers, which are, severely down, Tesla obviously still doing well, but, it's prudent for Elon to take steps. But he said initially that they were going to reduce their salaried headcounts by 10%, and then clarified that it wasn't reducing any manufacturing jobs for auto, batteries, or solar. And then he said on Saturday that the total headcount will increase, but salaried should be fairly flat, but that was over the next 12 months, not in the short term. And yeah, like you were saying, there's a lot of fat. It needs to be trimmed, and the market took it in a really bad way because it's a company that should be trying to grow, at 50%.
It's not at the mature end of its
yeah, exactly. But the thing is that if you look at Elon's comments, I guess he didn't explain everything correctly, but I think on Monday we should see a bit of a respite on the stock price, because Elon's just saying, look, they're going to be increasing. And
one thing that Elon, he does do, he's very fluid. One thing we were speaking about this in the previous podcast is that if he just sees something, he acts straight away. Like you're saying, even with his cars, he might be building a generation of cars, and if they found a development improvement, then from then on, they'll just put in the new cars with that new system or something like that. And I guess, he sees something, he just acts straight away rather than going through all this budgetary thing and this and that. So it does seem like that sort of way of thinking is continuing with him.
And then that's what's going to keep Tesla ahead of the pack. There's no point just keeping all this stuff that's not meaningfully contributing to the bottom line. And yeah, Tesla obviously very keen to keep their margins as high as possible. With every company, especially when you have years like the second half of 2020 and 2021, with the crazy madness that was the job market, I'm sure they just made too many hires in the heat of things. And obviously there are certain employees have been there for a certain amount of time, need to trim.
I mean, what my take is, we've seen this whole inflation coming around, and we're seeing wage inflation, although it's still not keeping up with the pace of inflation in just the general economy. But we are seeing huge salary increases, especially in the tech sector. A lot of these jobs, I had Jamie Dimon, he was saying we are paying our staff very well to keep them there. So there is still a shortage and a real need for talent. And, just on Amazon alone, the staff salary increases have been gigantic. I think they had a 160 cap, and now it's gone to 310,000 cap. And so you're seeing these massive inflationary wage hikes. And because of that, now the companies are seeing profit margins squeezed. And this is now leading to some of these job cuts because so many people are getting paid so much more. Just even in fast food or just in retail, the wage increases in these industries as well has gone up so much. To be a bank clerk at Bank of America, $22 an hour, and it's going up to $25 an hour when it used to be a $15 an hour job. So we're seeing this across the whole space. And this is now, as now it's seen it hitting to the bottom line, these guys are going, right, we don't need that many staff. We're paying our staff quite well. Right, we're freezing right here. So it definitely seems a bit of the economy, but also these huge wage rise increases has now seen a lot of the slowdown in hiring, and it's sort of just coming across.
Yeah, definitely. I mean, you see Kathy saying, retail jobs down 61K, manufacturing sector, the gain was only 18,000, but 39,000 was expected. The manufacturing work week declined, so inventories must be up. And, in a market like this, you expect that with inventories up, advertising to increase. However, I've seen it on our app that advertising rates have declined. Even Kevin was also predicting a advertising boom in the second half of the year as inventories pile up. But he also just did a recent video showing that his ad rates are down as well. There's not as many advertisers pursuing campaigns. They're pulling their campaigns and also lowering their ad spend. And we're seeing consumer sentiment is at 2008 lows at the moment. So
we actually had that announcement from Ford. Ford's announcing all these job gains with their new plants and the investment in Michigan and other areas. But Jim Farley did say in his comments, talking about margin, but also talking about advertising, saying that he does not expect to spend money on advertising for their EV range. And that's telling someone. Ford are some of the biggest advertisers out there, and he's saying he don't expect to advertise. I don't know if he meant in the whole general spectrum. I need to actually look for that comment, or whether it was on the social media space. But for the Ford CEO saying that they won't need to advertise for their electric range is saying something right there, because they're one of the most perennial spenders on the ad space. And the thing is that, so when you've got the Ford CEO saying that for a brand such as Ford, it just tells you where the advertising space is right now for certain companies and the way that the current trend it's going at.
But the thing is that you have to look in deeper to those words, because there is no point in advertising their EV range because they can't make enough, right? What's the point of advertising a product that you don't have? It's actually killing the sales of your ICE vehicles. So him announcing that is basically just saying, hey, buy our ICE vehicles, because if you look at all EV makers apart from Tesla, even Tesla, I guess in a way, just can't keep up with demand. I was looking deeper into the mining operations, like what the yields are currently on the actual lithium and nickel content. And the thing is, the world is woefully unequipped to deal with the huge demand that's going to be in EVs. So I'll just recommend for anyone who does have an EV or is considering buying one, just get one as soon as possible. And also, they're going to hold a really good premium in terms of their values going forward over the next couple of years. I don't think you're going to really lose much money.
EV secondhand. I'm still waiting for my Mackie. Put the order in December. It's now June. Don't even have they haven't even started the production of it yet. But looking at the forum and other people that have put orders in last year, it looks like it's around 9 months to get it. 9 months is the sort of lead time right now. So maybe by July, beginning of August, might get it. But the thing is, right now I'm looking at Carvana. I'm looking at some of these other websites to see what they're going for, and the Selects, which is a $43,000 option, is going for 62 grand, 63,000. It's going for 15 grand over, almost 20,000 over what the RRP is. It's unbelievable. And it's every EV, like the Tesla Model Ys are going for 80 something thousand. But it's not just them cars, it's just any car. Like my current Volkswagen Jetta, which is 3.5 years old, is going for 2 grand less than I bought it for. And without going to try to sell it to someone, just sell it to a Carvana or a CarMax or one of those. Just the demand for cars is, at this current moment, it seems like a bubble, but it is the dynamics of supply and demand right now that is leading to that bubble. But if you're in a position where you can just cash out on a car right now, it's a great place to be, But
definitely,
it's the problem. There's just no one can get a car right now. Like you were saying to me earlier, the sales of new cars have been very low. So the inventory that will come on from these new cars will actually be lower than what it is right now, which is going to exacerbate this high prices for used cars for quite a bit of time to come.
So my prediction is that the prices of used vehicles in general, especially ones that are 3 years to 5 years old, are going to continue to hold their value pretty well. They are going to start to depreciate from levels that they are at the moment, but they're not going to go down to pre-COVID levels, just owing to the fact that there's just, like you were saying, not enough production. And by the time that the production issues are sorted out, I think that more, demand is going to be on the EV side, and it's just, I think they're actually going to hold their values pretty well. So the stats,
it's actually been the best inflation hedge right now. You had the money in the market, you're getting killed. You got your money, buy a used car, and that's been your best value. Who would have thought, like, how the tables have turned? People go, buying a car is a depreciating asset. You would never want to buy a car, and now it's actually held your money the best compared to every other investment out there. It's just, it's unbelievable. It's
and also it's tax free. It's tax free to sell a car, right?
It's bananas. But just in general, like the energy prices, the nat gas, we got Europe just right now looking to ban Russian oil. You know, they're going to be trying to wean off of it, and that's push another tailwind into oil. Oil actually, WTI anyway, went above $120. And I mean, they're just, you know what, those who've been following my portfolio, my 10K portfolio, that one, you know, I've been trying to short oil, and, you know, they're just shorting it all the way up. Because I mean, if there's anything you can short right now, you're going to, you know, I guess these stocks can all continue to go lower, but you're going to short something that's gone down 70% already. Or when you start seeing these moves that, like in oil or XOP, Occidental Petroleum, all of that sort of space is just non-stop upside. But I mean, to be honest, it just doesn't seem like there's any respite in those shares. And it's a bit of a tough one. You try to buy the ones that have been beaten, they continue to get beaten. You try to get the ones that are going off the high horse, they just continue to go up until they don't. And the question is, when is that going to happen? And when it happens, will you have that position on to, you know, capitalize from it? You know, I've been saying this market was overvalued for years, but the thing is that when it happens, how long do you have the position on? How much do you take advantage of it? I mean, that's been the question. But I just want to share right now just what, you know, where the market is. And we look at, you know, we've been going by looking at this chart since we started this pod pretty much. And when we spoke last time, you know, I did note that this trend line that's running from here all the way down from here is a very important one because it's held up incredibly well. And I want to just note, we spoke about it last time where we had 3 wicks, 3 pin bars, basically this one, this one, this one. And every time we reached that level, we bounced off and we bounced out hard intraday. And then so we had another move back on May the 20th. And again, that was just the swing low that we just recently had. And what do we have again? Another pin bar. Unbelievable how we've now had 4 pin bars at this lower trend line. And it's unbelievable how it's held up so well. So we got it, we breached it, and we've come all the way back up. So it definitely seems that the buyers are always buying at this level as of now. 4 times we've had huge buying from the lows. And then we had a really nice bounce because we had 8 weeks of declines in the Dow, which I think was the longest record since the 30s. And then inevitably we broke that, and then we had some nice moves prior to last week. And then last week we've sort of consolidated over here, and we're actually trading towards the upper end of the prior trend line. So the thing is that next week, are we going to sort of hover up towards it? Like, I'm really hoping that we can break this line, and if we can, then we can sort of push back towards the 4,400 level. But to be honest, all these headwinds we're talking about, the announcement from these companies, Microsoft warning on FX headwinds, you know, I just don't see any catalyst that's going to really push this back up towards here. But the market did bounce. We had some nice green candles over here. But I mean, we just got to follow these charts, follow these lines, and just see how it reacts around these levels. So, you know, judging by the macro news, I do expect it to come back towards this 37.50 level. But we wait and see. We'll see if there's any new catalysts. We'll see what the companies are reporting, if we can get more hiring freezes, if any of these other big companies are going to come out and warn on second quarter earnings. So it will be very interesting to see where we go. You know, in the ideal world, if we can sort of just continue to consolidate like we did last week, that would be nice. If we see crude oil just give up a little bit, you know, surely it's priced in a lot of what we've seen already. You know, it'll be nice. But I mean, this is where we stand right now. And yeah, so we'll just see, I mean, what happens. I mean, how have you been playing this, you know, if at all?
Yeah, no, to be honest, I haven't really been doing too much, just kind of hodling. I did have some 700 sold puts that expired, which was good. But apart from that, I think that we are kind of consolidating, and we've hit some kind of potential bottom. But it really just depends on how Biden wants to make Powell kind of sing in terms of, you know, what's his goal. I mean, the midterms are coming up.
His goal is get inflation down at whatever cost necessary. They will sacrifice the market to get this inflation down, because the thing is, if fuel prices are what they are right now, come to the midterm election, they're just going to get obliterated. But if it could show that he brought inflation down, and we're getting from $5 a gallon gas to back to below 4, for example, just psychologically, it will be such a relief to a lot of people that, you know, they just won't go, I need to get Biden out of office. So I think for him, his mandate 100% is inflation. And I think the thing is that just a secondary thing.
Just imagine if they, like, Manchin saved, you know, the Democrats by, you know, vetoing the stimulus infrastructure bill. That would have been another couple of trillion printed. So that would have been an absolute disaster if they did carry on with that. But I guess with Biden trying to, you know, get inflation down, especially in terms of fuel prices. I've seen screenshots of people in California talking about $8 gas and stuff. What is it around where you are?
So it's about $5 right now. But you know,
Wow.
Biden was supposed to go and see. Now you're seeing, with Russia out the picture, there's a couple of things that are happening. So Biden's looking to go to Saudi Arabia to talk with their sheikh to try to increase production from, you know, Saudi Arabia, which is one of the major nations in OPEC. But that meeting has now been delayed, and now it's not going to happen till July. They was hoping that it was going to happen next week. So I don't know how the oil market's going to take that, considering, you know, that was the murmurings in the last week that he was going to travel to Saudi Arabia to meet with them. But now it's been pushed back to July. They're also looking to turn a blind eye to Iranian sanctions, oil productions, and also Venezuela as well. All these people that have been under sanctions, Venezuela, Iran, I mean, something's got to give. They have to, I mean, they're all looking to quietly sort of circumvent some of the sanctions to allow production, allow Europe to buy Venezuelan oil, shipping it to there, because, you know, they need to get their oil from somewhere, and if it ain't Russia, then it's gonna they got to do something. So this is what's happening. Whether it's right or wrong, that's another question. But this is what's happening.
No, look, so Biden, you know, trying to do whatever he can to keep the markets down to try to stop inflation. You see some of his tweets there, you know, even that Jeff Bezos is replying onto it, like, he's like, "Oh, we need to stop inflation. We need to tax the billionaires." You know, it just doesn't. He actually doesn't make any sense. And the thing is,
he's just writing what certain people want to see. You know?
Yeah, but it's disingenuous as a. It's disingenuous as the leader of the free world, you know, to put out
these politicians. They're not even worth every politician is as slimy as anything. Like you know, like my opinions of politicians recently, with every aspect of everything that's going on in the world right now, is virtually, if there could be anything below zero, it would be. Like, there is no politician that has held their hand up high right now and
100%
themselves.
You know, going to your point earlier about Tesla cutting jobs whilst Ford is adding 6,000 EV jobs, right? Biden said that, but it's not true. Like, you know, since 2018, Tesla's added like 51,000 jobs, whilst Ford have cut 16,000 jobs.
Do you see the PR for that? The whole PR, the amount of times I heard the word UAW, high-paying United Auto Workers jobs, high-paying UAW jobs. It's basically emphasizing that these unions and these worker-friendly, I mean, this whole type of thing, all the jobs are around the whole unions and allowing the unions. And the whole PR was basically a pump to the UAW. So it's all calculated. Everything is just a game. All these announcements, it's just trying to show the people that we support the workers. You can have the unions getting your back and this and that, and then Tesla don't have that. So, I mean, you know, you can see the game that's being played, and that's just.
I know the game is being played, but it's like I've said in previous podcasts, Tesla is a jewel of America, and it's being treated like it's so bad. I mean, the Dems are just, you know, at least with Trump, he acknowledged everything that, you know, Tesla was doing and SpaceX was doing, whilst you know, Biden seems to mock it, which is like, I don't know, I just find it incredible that you know, you should, like, literally the most innovative company in the world is in your country, and you're kind of doing that. It's just, I don't know, it's kind of sickening. But anyway, this is just the way of things. This is
what happens when you don't play into the political thing. Elon is a renegade, and the thing is that I feel like if you had, and maybe Tesla wouldn't be in the same position if it wasn't for someone like Elon, but if like Elon was just a bit more corporate, I think Biden would be tooting his horn too. But it's just that his
but how are you gonna? The only way is the UAW. Like, the UAW owns Biden, so unless Tesla, it's nothing to do with Musk. If Tesla unionized, then he would be singing their praises, not, you know, doing the other stuff. But anyway, this is it. Tesla have higher paying jobs on average than UAW workers. So I don't know what else they want.
But anyway, it all comes down to politics. You see,
of course.
When it comes to anything, it comes to that. You know, gun control. Don't even get me started with that one. But there's always some institution, some organization which have these politicians balls in a vice. And the thing is that they are puppets to these organizations, and they have to just say what they have to say to appease these people that are literally squeezing their scrotal sacks. So this is just what it is right now, you know. So I mean, this is just the way the world is. These organizations just control all of them, and all of them are just mouthpieces for these people that are funding them. And so, although they say that half of these people are for half of these politicians for the people, none of them are really for the people. Let's be honest. But
but
anyway,
isn't that such a shame? Like, we're in 2022, and this is it. Like, the politicians are working for their own pockets rather than, serving the people.
I think it's always been like
so,
that, but it's been no more apparent than recently.
Oh,
where
yeah,
it's
it's
so
crazy.
clear to see. It's always been that way, but it's like when it just seems such obvious things you could do, but your hands are tied. So
this is it. I mean, like, just looking at Biden, just one last point, just looking at Biden, he was mocking Elon Musk over SpaceX, but SpaceX have saved billions of taxpayer dollars for NASA, right? Just in terms of NASA picking Starship as their 2024 moon lander, right? Just look at the bids, 10 billion,
no, but see,
5 billion for competition, and SpaceX 3 billion. So literally all those billions have been saved for the US taxpayer, but still treat them like crap.
So I mean, see, this is what it comes down to. Like, I mean, one last point on this. I mean, It's clearly obvious, the benefits that, for example, Musk companies have brought to the States. But Musk has literally gone out there on Twitter and called Joe Biden a sleepy this, a puppet sock, and all of this. And so the way he's basically ripped the president of his own country and treated him like some high school kid. But the thing is, you can know that's going to piss him off, right? So the thing is
only after he's already dissed them, it's not them that struck first, right? But
I know that's the whole point, but because of that, I feel like there's just a lot of bad blood. It's just all in the words, and so I mean, they need to all grow up like adults. I don't know what's going to happen in the future, but I'm not saying that any of them is right or wrong. It's clear the benefits of one, but sometimes Elon's behavior rubs people up the wrong way, and then it's more like, all right, if they're going to go treat us like this, we're coming after you, and we're going to not make things easy for you, and then this is how it all works out. And then afterwards, and this is just how it all works. It's just this big battle for who's got the biggest cojones and who can have the most sway in certain things, and this is where it comes down to. Just a bunch
at the end of the day, if you sit down and take it, right, you're just a puppet, right? If you know things are wrong, and there is, like, Elon does have a strong sense of justice, and he won't stand for it in that way. So he'll always try to do what he thinks is right. It's not always, that in hindsight what is the exact right thing, but he kind of wears his heart on his sleeve, and he does what is supposed to be the right thing. So anyway, it is what it is. And I think, whenever there's change, there's always opposition. So this is what it is. I mean, what do you think? Is Biden going to win the midterms?
Oh, no. It goes without saying, just historically, regardless of with anything that's going on, always the incumbent party loses out in the midterms. It's always the case. But the thing is, in this particular case, with inflation the way it is, and virtually, every aspect. And the thing is that I've said this to a lot of people, a lot of this ain't Biden's fault, because what is happening, the phenomenon that's happening here, if it was just a US-centric problem, then I would say, yeah, okay, it's Biden's fault. But we have fuel prices are globally traded futures contracts, so it's everywhere. But to be honest, regardless of the global forces that are happening, and, there's obviously reasons behind it. But the thing is, while these things are happening, if there was a Republican in power right now, you could imagine CNN, CNBC, everyone going, just absolutely ripping on the president to do that, because of you, this is happening, and this is happening, and this is happening. So the thing is that regardless, whoever's in power at the time, you're going to be the fall guy for what is happening. But regardless if it's a problem you could have controlled or not, it's your fault. And that's just the way it goes. It's like the CEO of a company. So the thing is that I think at this current moment, the way things currently stand, it's going to be an absolute demolition. But the thing is, there's a lot of things at play that have happened that have changed certain things that are outside the scope of this pod. But we got, the abortion laws. You're getting this insane amount of mass shootings happening right now, and all of this type of things. And if this continues, and then it clearly seems like there's one party that's resisting change, then you'll still see a Republican take seats, but not by the extent at which it looks like it's going to happen now. So, but we'll see. It all depends what's happening just at that time. So at that time, if we start seeing inflation come down, then it'll be better for him. But there's no doubt that they're gonna lose a bunch of seats.
So Rajan, why, if someone had to tell you what would happen if you print trillions, right? Like, I'm not talking about from history, but just from a pure economics point of view. What's going to happen? They're just tapering now, right? So it's I think it's insane. Like, why didn't they just stop?
The Fed is an independent organization. They were made independent purely for this purpose. Politics and the incumbent leader should not have an influence on what the Fed is doing. So Biden, his plan, this 1.9 trillion plan, it didn't pass, so that don't matter anymore. But the point is, disinflation happened because the Fed has been buying $80 billion worth of bonds for so long. But on top of that, the amount of stimulus packages there were, like the cutoff level for getting a $1,200 stimulus check here was, I think, like 150,000, phased off to 200,000 initially. And there was 3 rounds of that. Then there was the extended childcare credit there was as well. And right, there were people that needed that money, but I think that just too much of a broad range of people got it, whether you're in a great position or not. And there wasn't really any checks and balances. It's just that, all right, you're in less than this and that, you're going to get this much, or you're going to get this much. I've seen expats that are living in other countries also get the $1,200 stimulus check, even though they don't even live in the US. And you've got all these people, and they're all buying a new TV, they're buying a new PlayStation, they're putting their money in a Robinhood account, buying Dogecoin, pumping up all these stocks. And you just see this massive influx of money coming into the market. First of all, makes the comps much more difficult for these retailers, because obviously they're going to have much more higher figures when all the stimulus is coming in, when you compare it to earnings now. But second of all that money comes in, there's this false sense of wealth that's coming in. And so you've had this extreme amount of money that's been pumped into the market, and that came from the end of the Republican administration, the last one, and the beginning of the Biden administration right now. So I don't think you needed that much stimulus, and if they did, it should have been much more targeted for the people that really needed it, and I'm sure they could have figured that out. You could see a lot more than just blanket giving money away to everyone. So that was the start of it, and on top of that, you had the Fed that just kept rates too low for too long, thinking that everything is transitory, and these are supposed to be very clever people, but they could not clearly see what so many people can see, that this was a systemic issue on the supply chain. It wasn't a transitory problem. You had Neil Kashkari, which is, uber dub. We shouldn't raise it. And I mean, if you look at it, now they're seeing it and they're trying to act to it. But then you got the ECB, who's still negative 0.5%. I mean, they got negative rates, and finally they're starting to go, oh, this is, inflation's going to go a bit above our mandate. I mean, we just had the EU flash CPI number coming out. I can't remember the exact number, but it was 6 or 7% or something, and their mandate is 2%. So finally, these guys are saying, right, we've got I mean, we're talking about just getting above zero in the ECB. We've gone from negative 0.5%, saying get it above zero. But even that, people are like, oh, you've got to be careful, because what's going to happen to the economy if we bring rates above zero? And the thing is that we've just fed this economy for far too long, stimulative, low rates, pumping in money, QE, buying bonds, doing this for so long. And it's something that it's not just something that it's like a volcano. It's been building up over the last 5 to 10 years. The way that the central banks have just fed this economy on this false sense of security. And then you take away the punch bowl, and here we go. This is what we got. And obviously right now, it's not something that is one particular person's fault. It's the fault over a period of time, where these policies, easy money policies, have just been kept in for too long because the economy is too fragile. And if you take it away, what happens? Oh, people go, oh, we might, how can you take away the 0% rates? How can you take away the 80 billion bond buying? Because, the economy needs it. The economy needs it. And now we're in the stagflation period. And then this is the thing. So, I mean, Janet Yellen, the Fed should have all seen it ages ago. But the thing is, this has been brewing up since, for a long time. If you actually look at it on an index level, I mean, we are, if you look at a long-term chart and you see how much half of these companies come off, you can barely even tell the pullback. If you look at a 5-year chart for half of these companies, literally, it's like, the decline that's happening right now is so minuscule overall compared to the long-term chart. But obviously, we've had the most amount of people coming to the market over the past couple of years. So it's just the optics. You might, if you had a 401k or you've had your retirement account for the last 20 years, and you're down 25% from your high. You're like, oh my God, I'm down 25% from my high, but from the last 10 years, you're still up good. So everything is where you take the point of reference.
100%. So what are your trading plans for the next week or two?
So, I mean, it's been very difficult to bottom fish right now. It's so hard to call these bottoms. But right now, in terms of the option market, we're seeing really juiced up volatility. And so you can sell certain companies that, get a couple of bucks of premium, and the stock needs to fall 40% in 2 weeks. And then you just play those odds. And so, I did, when Coinbase was at I actually did an earnings trade that got a bit lucky. It was about 75 and I sold a 65 put. And then it sort of went to 42 after earnings and sort of bounced back up. But right now in Coinbase, at 66 bucks, you could sell a 40 put and almost get $2 for it with 2.5 weeks till expiry. I'm like, so you need that stock to drop, about 40 odd %. in 2 weeks. And so, I mean, with these things, if you go further out, I'm not looking at getting the big premium. It's about taking in that premium for just really unlikely 1% moves. And I feel like that is the best play right now, just purely because the volatility is so high and you're getting some really fat, juicy premiums quite far out, So, I mean, that's all I'm doing right now, because right now, I'm, pretty much as long as I can be. I don't know how much I can keep on being more long. I mean, this is just, just try to play around the positions. I mean, so that's just basically my plan. Like, so every time, so in this move up that we had, I trimmed a few of the positions that I had, and if we come back down, I'll just put them back on. So that's all I'm looking to do. But yeah.
Awesome. Yeah.
So we'll see how this week, next week will be interesting, how it all turns out. And I'm sure we're going to continue to see the same type of volatility as we're seeing right now.
100%. There's pretty much a guarantee we're going to see chop. You're going to see, big drops and big increases, especially with the really beaten down stocks. But then you'll just get rug pulled. It seems like just for the rest of the year until we get some kind of certainty. But you have to just look at it. Rates were 0.25%, and if the target is 2.5%, that's a tenfold increase in rates, right? And obviously, when you look at it from a historical perspective, it's still relatively cheap. It's just the magnitude of what's happening in terms of those who aren't prepared.
One thing we haven't even spoken about in this pod, and I just want to briefly touch on it, is obviously the crypto market. We've seen the collapse of Terra, $50 billion. And mainly, we've seen a lot of projects being hurt, a lot of institutions, a lot of coins. Avalanche has been really affected by it. We've seen 50. I mean, this collapse was on a monetary value as big as Lehman Brothers. Obviously the wider ranging effects ain't anywhere as close to what the Lehman effect was, but you've had a lot of people that have been taken to the cleaners and have lost their life savings, life money that really believed in the Terra ecosystem. I lost a bit on it as well, but nowhere, it's not to a point where I've been affected as badly as, some of these other guys that really had some proper coin in that. And then you've seen a lot of these projects, and I mean, the new Terra 2 has come out and they're airdropping the coin, the new Terra 2 coin, but there will be no stable coin. But it's really been a tough time in the crypto market as well. So it's really, it's been a bit of a rough one. So it just overall, just the sentiment everywhere on the retail space is just very difficult.
100%. And a lot of these funds are going to just have huge write downs. So what is your, what's your kind of outlook on crypto at the moment? Where we kind of heading? Or is it just, lockstep with...
they call it a crypto winter right now, although we're in the summer, but we're in the crypto summer winter, right? And I think, just the same way stocks, because the one argument is, people call crypto, this and that, and, there's been a lot of bad, a lot of decline, but it's on par with some of the declines in the stock market and some of these high beta names and non-profit companies that have literally been taken to the cleaners, down 90%, 85%. So it's on par with some of these altcoins. But I think crypto, again, it's highly correlated to the NASDAQ. If the NASDAQ and the market in general rebound, we will see some type of rebound in the crypto market as well. So I think right now they're all intertwined in a certain way. And so obviously you have your individual projects that might have different outcomes on how it all turns out. But as crypto in general, if you look at the market cap from the high, which I think on the overall space, which obviously is largely dominated by Bitcoin and Ethereum, was about 2.3 trillion, and now it's about 1.3 trillion. And so if you compare that with, let's say, the NASDAQ taking away the big FANG names, you're pretty much there. It's pretty much the same type of decline. So I think it's highly correlated to the NASDAQ. So overall, if risk sentiment comes back, risk sentiment will also come back in the crypto market. So there'll obviously be certain projects that will do better than others and will outperform. But in general, as a market as a whole, I just think it will be led by what the NASDAQ high beta names are doing. That's what the crypto market would do.
Okay, well, so it's a great episode.
We're going to subscribe if you like what you heard. Feel free to leave a comment, and notable talking points all coming ahead. So there'll be a lot to talk about, and so we'll definitely try to be on top of everything that's going on, and take it from there.
Okay, so we'll see you guys in the next one.
See you in the next one.